Welcome to 30 Days to the Deal. I'm your host, Ben Humble, and this is the #1 results-driven community for real estate investors in Canada. And on this challenge, we select a group of Canadians every day that we go live with, and we work in their business. The difference about us, and the thing that really sets us apart, is a lot of people talk about real estate while we do the real estate. We are practitioners, everyday doers. Wouldn't you know, I have a crazy surprise for you. Somebody has an accepted offer on day number 7, which is crazy. In fact, our belief is this: we learn how to buy discounted real estate in any market. And when we learn how to do so responsibly, we get to utilize OPM, other people's money, using leverage to buy real estate. And so we get free real estate, free estate, which means that we're able to leverage capital, find great deals, close those deals, and use little to none of our own capital to close deal after deal. In fact, I've done this. Since 2006, I purchased and closed on 300 plus properties. Yes, in Canada. And I love using what's called consumer private lenders. And I've raised over $40 million from consumer private lenders. And so today, before we dive in, we're going to do a micro lesson on how we prepare ourselves for really making this a real thing. So Kijiji has been a really great resource that we've used. What I've done here is I've actually got the business to a point where we really think like marketers. And I'm going to give you a couple of words today that'll be a little bit more advanced, but it'll help you just understand the framework of how we got here. And thinking like a marketer, this is what we do. We ask the question: if I invest $1 into my business, what will I receive on the back end in terms of revenue or profit? See, we're a business development program for Canadian real estate entrepreneurs. And so we really teach business. And so we care a lot about marketing and sales because that's how we get great deals. And so if we can get $7 back, meaning we spend $1 in ads, we wholesale a property, make $7, that would be a 7x. And the language is ROAS, ROAS, and which stands for return on ad spend. And so part of our business is understanding that we want to spend $1 and make 7. And if you start thinking that way, then you start to say, well, if I'm willing to spend $1 on what we call a lead is a person who wants to sell their property. That's a lead. And so you find a property for sale, they want to sell it, that would be a lead. Once we have a lead, then our very next thing in marketing is to qualify the lead. Qualifying a lead means that that lead fits a very strict criteria that gives you an advantage, and we call that criteria the buy box. And so the buy box, it's the parameters that you've used to identify the perfect type of property that you want to buy. And so a typical buy box would look like this. So for example, I use single family, okay? And single family means one person, one family per property. I like to buy single family residential, and I prefer to buy something in what's called a high liquid market. And so when I'm looking for resources that have at least 1,000 listings per region. And so why do I do that? Think about it this way. The real estate property is basically our product. It's a completely different way of thinking. Real estate is not an investment. Real estate is a business. The outcome of the business is that you get the investment for free. And so if you do real estate the right way and know how to capture value and you run this business, you capture equity. Equity gets converted into either capital being raised or cash in your pocket. So you can get cash today or growth tomorrow. But when you learn the business of real estate, the product is free. I know it's crazy when I say it that way. It sounds too good to be true. I'm looking for a market where there's a lot of buying and selling activity. And the reason for that is in the game of business, I want to be in a highly liquid marketplace where there's already buyers and sellers working every day to get deals done. If I do that and I just simply walk into an existing robust market and I simply operate better than the person next to me, I get to make pretty strong gains. I get to win. If I select a market that has very few properties for sale or very few buyers, well, then I'm not going to have a lot of opportunities for selling my properties for a profit. And so we want to create profitable deals. And here's the crazy part. This is what nobody tells you. When we buy real estate, here's what's vitally important to me. We lower the risk and we increase the return. It's a very, very simple but profound understanding. And so how do we lower the risk? Well, we lower the risk, #1, by paying less. If the property is worth $500,000, you have to, absolutely have to get a discount. And so we start our negotiation at $350, which is 70 cents on the dollar. Now, this is where my train of thinking differs from a lot of other, let's say, coaches or industry pros. My objective is to lower the risk as much as humanly possible. In order to do that, it's very logical that I pay less for the property. If you get convinced into paying more because some agent wants to make a higher commission, at the end of the day, you will be the one that pays the price if and when the market drops. And so if you want to protect yourself, pay less. It's a very obvious principle. So our entire basis for marketing and sales is factored around the idea of paying less. And why is that important? Because the market went up from about 2011 to 2022. Canada had one of the most aggressive growth markets that we've ever seen. And so a lot of people, as soon as they got here, people are paying more than asking all over the place, and buyers got screwed because the market stopped rising and it pulled back. And so the market pulled back about 18 to 20% depending where you are. And so anybody who bought a property in 2022 and paid full price for over asking, they have negative equity. If you want to protect yourself, a recessionary dip is about 20%. If you want to cover your assets, go ahead and make sure you never pay more than 80% of fair market value. And that's how you lower the risk. How do you increase return? Well, number one, we have options. These are called exits. So one option is we can sell the newly written contract for a profit. That's called wholesaling. This is a business to business strategy. We can close on the property and put it back on the market and expose it to regular mom and dad buyers, wholesaling. And you should only wholesale to people who actually have the capital, the means, and the experience to close quickly. And this is a business to consumer strategy, which means we sell it to everyday mom and dads. Our third option is to fix and flip it and sell it to our consumer plus, the people who want to pay top dollar for a very nice property. And then the last part is the long-term rental. It's important for you that you always get a deal. When you get a deal, you have options. When you have options, you have exits. When you have exits, you've lowered risk. If you take care of the risk, the reward oftentimes will take care of itself.